Hi, I'm Oliver Renick. Today I'm here with Stanislas Rouyer, who's an Associate Managing Director at Moody's specialty covering Insurers. Thanks for coming in, Stan. Appreciate it.
Thanks, Oliver.
So last year, we had a pretty interesting year for insurers. The total volume of insured bonds was down, but market penetration for insurers ticked up a little bit to around 3.6%. Just kind of wondering what that means. What does that indicate about the strength of the insurance market?
Yeah, if you look at the number, they're still around 3.5, 3.6. So the penetration has not improved. In fact, it's still close to the lowest point it has ever been. So in terms of reestablishing the franchise, 2013 was probably not the year where you would have seen that coming. Now, it looks as if early this year things are improving somewhat, but 2013, I think the biggest development in 2013 was the entry of a new player. So the pie relative to 2012 is the same size, but now you have two companies sharing the pie. So Assured lost meaningful share to Build America.
Yeah, and you mentioned this year so far they've gotten off to a little bit of a better start. The numbers just came from Reuters yesterday, just kind of looking at it sort of an estimated number thus far, and it looks like penetration might be around 6%, whereas last year was around 3%. Going forward, the volume for this year has been projected to be lower. A lot of that's due to refundings, but overall volume is supposed to be down. And how is that going to affect sort of the insurer's rebuilding effort?
Yeah, I think the total volume of origination is really secondary to the effort of trying to regain market share. So volume down in itself is not really the main driver of the guarantors' penetration. It's really, can they reestablish franchise? What could happen is with less origination, there's going to be more investors looking for muni deals, which could have an effect on actual credit spreads, which would lower the attractiveness of bond insurance. So we'll see what happens there. Yeah.
And you mentioned that the big event for last year was having that other entrant, BAM, ramp up their business. And generally, I think the market expects that NBIA's National Public Finance Guarantee is going to come back into play at some point this year. There's been talk of other bond insurers, but that's kind of subsided a little bit. But either way, we expect that new entrant. And what kind of challenges are there going to be for a new entrant into the market to come in and take a meaningful share and play a part in it?
We asked ourselves kind of a similar question when BAM was looking to enter the market. And at the time, I think we thought that it would be a good thing to have more competition in the market. With only Assured offering bond insurance, it's hard to argue that you have an industry when there's only one player. So we thought BAM would be good for the industry. We haven't seen that in the numbers. So if the penetration doesn't increase, if the volume doesn't increase, having 3 players instead of 2 would not be good for the industry. Now, if we see that in the context of the industry regaining traction, it would probably be a good thing for the industry to have more than 2 players. But the question that remain is the industry regaining traction? And they face some headwinds. Clearly, the interest rates remain low, which reduces the value of insurance. Also, the companies are in the news in not positive ways. The structured finance is still on the portfolio of some of the companies. Now it's improving, it's running off, but it's still an issue. And then you have the big headline risk in the municipal sector with the exposure to Detroit and Puerto Rico that keeps the guarantor in the news and not really in a positive way.
Right. Now, you mentioned the market penetration really is that big number to look at. In the coming year, how are you going to gauge as an analyst or rating service looking at insurers? How are you going to sort of gauge the success of insurers? What are you going to be looking at in the coming year to be able to say that they've made some headwinds here, they've made some progress? What kind of things are you going to be looking at?
Yeah, I think we do not have a number in mind for penetration. Clearly 3.5%, as we saw the last couple of years, is a tiny fraction of what we saw pre-crisis when they had a 50% penetration. So the question we're gonna ask ourselves is, do we see a trend of improvement or of growth in the penetration, and do we see that while the industry maintains underwriting standards and pricing standards? So these are kind of the things that we'll want to see over the coming year.
Right, yeah, and I think there's a lot of investors as well that are going to be interested in watching how that insurance affects the market. So thanks a lot, appreciate it. Thanks for coming in.
Thanks, Oliver. Thank you for having me.
Absolutely.